What's up, investors? It's the Russian dude. Let's immediately talk about the stock market, which according to many criteria and parameters right now shows the signs of being extremely overheated or overbought, if you prefer this term. But in reality, the internal cooling process has already started, which might potentially signal us about the upcoming at least correction in the near future. First of all, right here is the graph of NASDAQ, which shows that it is significantly overbought, and this parameter reaches the maximum number in the last 6 years. Next graph shows the sentiment of the regular investors on the stock market, and as you can see, majority of them, they do believe that the stock market is in great shape, everything is good, the economy is doing good, and everything will just go up all the way to the moon. Which might sound optimistic if you're a beginner investor. But if you're an experienced one, if you've been investing on the stock market at least for a couple of years, you already know the very basic principle. Be fearful when others are greedy and be greedy when others are fearful. Well, make your own conclusions. Because let's be honest, and we already talked about this several times in my previous videos, right now, at least one of the main things why the stock market keeps growing, why the shares of individual companies keep growing, it is mostly because of the buybacks, as you can see from this graph, and this specific criteria, this specific thing, was also one of the main reasons why the stock market was growing in general, all the way since 2011. It almost feels like that companies discovered a cheat code. How can you always increase the valuation of your companies, even though your internal finances are not doing that good? Just announce a buyback, reduce the number of shares on the open market, and voila, the share prices go up. Speaking about individual companies right here, for example, just taking two of them, one of the biggest ones, Apple and Nvidia, we can see once again that a lot of investors, they do not believe that Apple share prices will go down in the near future at all. That is why put options premiums are at the very lowest. Long story short, like, why would Apple go down, they think? This is what this graph shows in very basic summary. And then talking about Nvidia, those people, the insiders who are selling their shares, they reached the biggest number in the last several years, as you can see from this graph, which basically means that the executives and Nvidia, including its CEO, they realize that probably the valuation of their own company is a little bit bigger than they even had in their brightest, in the most optimistic hopes. I'm not saying that the valuation of Nvidia is not justified, the company is great, but still, I mean, it is a little bit expensive. So the executives, they decided to take this opportunity, lock in some profits and sell their shares, once again bringing insider sales to maximum levels. And long story short, as a result of all these just mentioned, some hedge funds, they started to see some troubling signs. Because yeah, let's be honest, the market cannot go up forever. Eventually there must be a cooling process, a correction of 10%, of at least 10% or even more. That's why a lot of hedge funds, they started to play a very cautious game. It is not like that they started selling their entire positions, but according to some most recent reports by Goldman Sachs, what they definitely do is that they get rid of the leverage. So they get rid of their 10x, 50x, 2x, 3x leverage, because in case markets go down, the losses will be multiplied, the losses will be magnified. So this is what the hedge funds are preparing. In case markets do go down, they can limit their losses. Yet they still believe that maybe we have a little bit, couple more months of the growth, but as you can see in the near perspective, the growth is not there. And another troubling sign, this time according to JP Morgan, is that the meme stocks trading once again resurrected. You obviously know about the GameStop saga, AMC, all these altcoins, meme coins, all this cryptocurrency, the one which is created just for fun, following some trendy topics, which ceased to exist in like 2 days or less. Long story short, historically this was a bad sign. Whenever every single person, whenever a person who never invested on the stock market teaches you what to do and what to buy, this is the sign when things are not doing that good. And just to sum it all up, you can never expect the stock market to grow indefinitely, the very same way you cannot expect the stock market to decline indefinitely all the way to zero. The best analogy maybe here would be that the stock market always makes 2 steps forward and then 1 step back. For the last several months, we already did experience pretty good growth. I'm not gonna say it was a significant, it was extraordinary growth, but it was growth, at least in some particular individual companies nevertheless. And as soon as some companies' share prices they reach certain levels, this is when the algorithms they start taking profits, this is when the share prices growth slow down or they even reverse, and this is when then regular retail investors they start panicking and they start selling their shares as well, only accelerating the process. This is just in the very basic understanding how corrections work, and we only need one trigger. Whether this should be the Federal Reserve saying we're not gonna cut rates at all this year, or any other event, including the Black Swan event. But the statistics never lies. I mean, these are just pure numbers. This is pure math. You cannot alter it. Simple as that. Because right here we have a graph which shows that even though, yes, a lot of companies, a lot of share prices of these companies, they do reach their all-time high numbers, but the percentage of companies within the entire stock market, the percentage of companies which start to go down and already went down from their all-time high numbers only increases. And one of the reasons, I would say the main reason why the whole S&P 500 index still is in positive territory, it is because of the Magnificent Seven companies: Apple, Amazon, Google, Nvidia, Microsoft, Tesla, and so on. These are trillion-dollar companies. As long as they are growing, they will push the entire S&P 500 index with them. Because if I'm not mistaken, Magnificent 7, approximately at the moment of recording this video, represents, I'm not sure in the exact numbers, but somewhere near to 35% of the entire S&P 500 index. Just think about it. 7 companies represent 35%, while the rest, 493, represent only 65%. Which basically means that yes, these 493 companies, most of them, they can already start decreasing, but as soon as this locomotive of Magnificent 7 goes up, this will neutralize the underperformance of the rest of the S&P 500 index. And as soon as these trillion-dollar corporations start decreasing their share prices, this is when we might see the downfall of the index itself. For these reasons, I cannot stress enough, guys, always be careful about investing. It is always good to know and to think ahead, try to think 2 steps ahead than the regular investors. Because yes, majority of people think that the situation right now is very good. But whenever everything is good, inevitably something turns bad. So be prepared, make your own research, good luck in your investment decisions, and as always, thank you so much for watching. If this was interesting or informative, please like this video and subscribe to my channel, and see you tomorrow.